What's going on, everybody? Colin from Sports Card Radio here. Obviously, we're not breaking packs, or we're not going to do anything sports card related. I'm actually making this video for a friend of mine, but figured I'd share it publicly just because I'm not going to be sharing any kind of necessarily revolutionary information on here. I'm simply going to be going over some very basics of kind of starting a trading account or kind of beginning maybe a trading account. Maybe it's something that you've tried or something you thought about. So we'll talk a little bit about just some of the very fine basics that you probably already know, but maybe you haven't had somebody fully kind of go through them. And we'll go over some very, very basic technical analysis, something that if you want to get into trading and even buying, if I'm in here trying to buy long, if I'm trying to go long Apple shares at $100, or a couple days ago they were at 90 and I thought that was a good price, or 90-ish. You can kind of look at these graphs and they can kind of give, nothing's going to give you there's no secret trick or no system that is foolproof or anything like that, but certainly you can get better at picking spots to buy shares instead of just blindly buying Apple every month or every quarter, or however often you want to buy shares of something. So I'll briefly go over a little bit of technical analysis, or some of the ways you can kind of look at the graphs or interpret graphs. We'll go over some of the, what's going on this screen here. We've got, moving numbers over here. We've got all these numbers over here. What does all this mean? And just some real basic stuff. If you're a veteran in trading or something you've been doing a long time, this video is likely not going to do much for you. But if you're one of our younger fans, or somebody that maybe has a company 401k, somebody else manages it for you, and you kind of want to be a little more active, this is something certainly you might help you just with some basics. This stuff isn't really covered on like CNBC, and even if you go to like business school and stuff like that, they don't necessarily go over this in depth. You typically move on to higher level stuff, whereas really this basic stuff is kind of all you need to know, at least in the beginning. You can always get more into it, but first thing is first. So I'm using Apple as my example because it's a stock pretty much everybody is aware of. So, and it's highly traded, as we see up here, up in volume. VOL is usually how it's represented. 35 million and change shares of traded at it, and change, as we see. It's a roll. This is actual trades happening right now. And so what's going on here is what we have, buyers over here. These are people that are actually making bids to buy Apple stock. We can see we go all the way down. People are willing, the bids stop probably all the way down to $50. The odds of Apple getting its market capitalization cut in half in one day, probably slim, but there's certainly some people out there putting their bids in for that. What's going to fill for Apple is anything up in this range, more than likely, because it's a tight spread. As you can see, we have 45 is the bid, and I mean at this moment it's moving very quickly, but you can see up here there's something called the spread, and it's 1 cent, because something that trades in 35 million shares in one day is going to be traded on a very tight range. So if I wanted to come in here and buy 100 shares of Apple, this is the one time, oftentimes in your 401k and other type accounts, it's putting the order through at a market order. So if I were to click, review order, and then that would, I think, bring up my account number, so I'm not going to do it. But if I were to hit review order and then place this order, trust me, I don't have $10,000 free in my account. But if I did, I could place this order in a market, and when I click that button, it's likely going to go through around whatever this price is. Right now, it's going to be 150 cents or 151 or maybe 149, somewhere in that range. Now, a better strategy is to do some kind of limit order. And on this Schwab, I'm inside of a Schwab trading account. The reason why I like using I think they call these trading platforms. The reason why I like using these is because you can see the bid and the ask. Again, with something like Apple that is trading here at a really tight spread, and the market price is is pretty well known. And we can also see that Apple, the low for Apple today is 112 cents and the high is 153 cents. So literally we only have about a 40-cent difference between the high and the low price. So if I were to put in a market order, even if it's at 100 shares or even 1,000 shares, the difference between the two is not that significant that I'm going to feel really bad. Now let's go to a stock or go to something with a wider spread, something that's far thinly traded, something like, no, that's not going to be, that's like even more highly, that's almost 100 million shares. Something like, no, not like that. Sorry, I got all these I'm trading more highly liquid stuff these days. Here we go. USL. This is United States Oil. As you can see, I'm actually here at a loss. I meant to trade this, and I think I went on vacation. And so, actually, no. I don't know when I bought. I must have bought this back up in here. Maybe back up in here I saw this support, and I probably should have sold it here. But anyways, we'll go over that in a minute. You can see I only have 3 shares, so I'm balling. But so we have a spread here of 3. My point is we only have 69,000. Remember, we just saw a stock trading, 40 million shares. It's only 69,000 shares, and the spread is a little bit wider here. So we have 1432 over here, but the ask is actually, it just moved down a cent, but the spread is now 2 cents. So while not a ton of money, if I were to buy, 100 shares here, at a market order, you could see it went up to 1434 would be my price. But if I would do a limit and I were to tick it down to the 32, I'd be saving a couple dollars here. And over the course of your lifetime, certainly a lot. If you're heavily into trading, if you're trading every day, every hour, every minute, every penny you can save here is certainly worth it. Every dollar you can save here is certainly going to be worth it. So the more you get into trading, I suggest everybody do limit, limit orders. You need to be comfortable in knowing what a limit. There's other orders in here. There's stops. There's stop limit. There's this trailing stop. This is all for. Don't worry about this stuff. This is more for more advanced traders and certainly with people with fairly large accounts and maybe really big positions. And hopefully we all get to that point one day. Certainly if you had, we can go back to Apple and say you had, $10,000 worth of Apple stock and you were worried, well, I don't want it to, cut down. I'm maybe you're a retiree and you're scared of it, chopping back down below this $90 level. Well, you could put in some kind of stop loss or stop limit, and GTC is good till canceled. You could put it in here and say, I don't want to sell. I want to sell if it's at this price. And, there's all these different, and there's like trailing stops, and there's, stuff I don't really even mess around with. Really, the 2 orders you want to really know about are the market order, which is basically if I were to hit buy 100 shares of Apple, here's my estimated order. It's not included commission, but I'm going to pay at this moment about $10,000 and change. However, I put my limit order on and say I wanted to go down I wanted to get my order under $10,000. Maybe I only had $10,000 in my account. I could only pay $100 a share. So I could put my order in there and my order would be sitting down in here. And if I had $10,000 in my account, I'd hit review order, but I don't. So that's a little bit of an overview of how to place an order. To kind of go through it, just really to summarize it. Okay, I'm a buyer. I'm coming in here. We'll change our stocks. We'll go to AT&T. Stock I actually own. I own 15 shares at $34.27. So you can actually see I'm actually in profit land here. So I can actually hit the sell button, but actually you can see here they pay a quarterly dividend of 50 cents. And that's pretty much why it's in my account. So we have AT&T here. If I wanted to buy more shares, as you can see, I only have 15 shares. Likely at some point I'll come in here, I'll try to round this up to either 50. I'll probably maybe go to 50 next. So if I wanted to do that, that'd be 35 shares. I'd put 35 in my quantity. Typically, I don't recommend this. If you're going to be trading, this is more of I'm showing you my AT&T. I'm not trading AT&T at buying 15 shares. Obviously, you can see I bought 15 shares. I've gotten almost a full share in dividends since I bought it. That's why I bought it. Bought AT&T for the dividend long term. I'm going to have this in my portfolio for a long time. If you're trading this, remember you're going to be paying commission not only when I buy it, but then when I want to sell AT&T, I'm going to be paying $9.99 on the other end. So buying 35 shares at a time is going to just chew up a lot of my. As you can see, I'm 35 shares is an estimated cost of $12.88. $10 is almost. What is that, like almost 1% of that? So a little less than 1%, but still you want to be mindful of that. If you're a young investor, young person, maybe a guy with a family, not a lot of free money, I'm not going to discourage you from doing what I did and buying 15 shares, which cost me, $400 or whatever that is, $450, $500, whatever that is. I'm not going to discourage you from doing that. But be mindful if you got to get into trading and stuff like that. Obviously, the more shares you can afford up here, the less you're going to pay as a percentage of your commission. So, and especially if you're trading, if you're trying to buy, AT&T is not a stock. I'm on a shorter time. This is something I'll also talk about in a minute, but I'll put us on a daily time frame here for AT&T. And look how, yeah, it's moved up and down kind of a cycle, but look how we've been sideways for a while with AT&T. And I hit the nice little sideways action there. I could have bought here. So that just shows you this isn't a great stock to trade. Likely, there are guys trading AT&T, but there's stuff that's more volatile that goes up and down faster than this. And that's the kind of stuff I would likely recommend you trading. But anyways, again, to go through my order, if I'm buying 35 shares of AT&T because I'm trying to get up to 50 shares, and $12.88 is a reasonable number for someone like me. And so I'm going to reinvest the dividends. Now, again, AT&T has traded almost 22 million shares today. I'm going to do a limit order and say I want these shares right now. What's cool about this Schwab is you can click 3509 and it puts the limit. If I want to be down here, you can click it and it puts it up here. So that's kind of cool. Or if I want the trade to go through, for sure, I don't necessarily recommend this. I think you can always go a penny down. If it's towards the end of the day, we're here, it's 12 o'clock. You only got about only an hour left in trading. So, there might be some pressure to put this order through, but I think you can always tick it down a few cents. You can also see here, AT&T high for the day is 35.43. The low is 34.77. So actually a pretty wide, if you went on a daily or on, like a 10-minute time frame here, we can kind of look at what happened to AT&T today. I think this is all no. You kind of really have to zoom in here on these things. But you can kind of see, AT&T's moved around today. So there's kind of the basics of kind of putting in order. Obviously we hit buy. We're putting in the quantity of shares we want. Usually brokers put these in, the default. When I click off here, it usually goes to 100. It's not going to do it for some reason here. But usually default lots are 100. And if you have a big account, and this would be a $3,500 order, if that's not that much money to you, and for some people it's not. A lot of people trade that. We can see here's a 1,600 lot. Somebody just bought 1,600 shares of AT&T, which is $56,000. That's a lot of money here, but that's a casual trade here. There's 2,200 shares, so that's over $100,000. So you can see how someone like me, who would be in this, sub 100 range, that's still a lot of money. We're talking even, what I bought was 15 shares a while back, was right around $500. That's a lot of money, guys. But that's nothing in the stock market. A 15 share trade, often doesn't even show up. You could put this trade through and it might not even show up over here. Usually, and you could put your 15 lot order in here. Usually they show up. For some of the bigger stocks, it usually shows up, and even the smaller stuff, it shows up. But sometimes it doesn't even show up. You put your order here for 10 shares, 15 shares, it won't even show up on this board. Obviously, if you put 15,000 block on there, it's going to really stand out. So you can also get a judge too. Here, the reason why I love these trading platforms is you can get an idea of demand. Here's the order side. You see, these numbers change very quickly, but on the sell side, you see, between 5 and 7,000 right here up top, which, as we saw, is in excess of $100,000. So lots of money trading hands here very quickly with clicks of buttons. And, it's honestly a kind of a legalized form of gambling, in my opinion. But certainly there's a lot of information here. Unlike at casinos and things like that, there's a lot of transparency here. I know the prices. I can see the prices. Obviously, there's some dark pools, and there's some trading of AT&T that's not on this board and not being shown here. And you also have options as well, which is affecting the price of this, and this price is affecting this. And so there's a lot going on here. But as a casual guy trying to pick up 15 shares of AT&T to kind of collect a dividend, all you really need to know is how to click buy, likely reinvest dividends, unless you're older and you want to take your dividends as cash. 15 dividends is going to be, I don't know, $4 or $5 every 3 months. So unless you want In-N-Out Burger or a Slurpee for that money, I suggest you reinvest it. And you want to hit limit orders inside these trading platforms. You might as well hit limit order on your app, mobile app, and things like that. You might have to, or might just be easier to run a market order. But I only run market orders for big giant stocks like AT&T, Apple. If you're trying to trade some of this thinner stuff, maybe like on Schwab, we can trade all these like smaller ETFs that only, this has 100,000. Actually, in my watch list over here, I have a watch list called free ETFs. And so these are all ETFs right here that you can trade for free on the Schwab platform. And I have them sorted here, actually not right this second, but I usually sort them through volume. And if there's any trading opportunities from there, I usually look to go for them on the big volume side. As you can see, you get some real thinly traded stuff down here. You can see a spread here of 42 cents, 20 cents. The spreads are 40 cents on here. So, obviously that's $100 stock, so a 40-cent spread isn't that too common. But you see some wider spreads down here, this thinner stuff. So it's not something I normally get involved trading. But certainly if you want to trade any of the free ETFs, this higher volume stuff is certainly something you can take a look at. Now, if you want to get into trading, definitely want to get your orders down. I've made mistakes. Trust me, I've made mistakes. I've bought 100 shares when I meant to buy 10. I haven't clicked reinvest dividends. I've made mistakes on my limit order. There's also special conditions here. So I don't know why they're not showing up here. Maybe because I don't have enough money in my account. I don't know. But there's this all or none, or this minimum quantity. This is certainly useful as you get more in depth in your trading, or if you have a bigger account. If you're trying to put through big 5,000 block orders or these big block orders and you want minimum quantities, like if you put through 1,000 block order and you want to at least get 400 or 500 shares at a time, often to cut into commission costs and order transaction things, you can put a minimum quality, or AON is all or none. So I can put in like a 10,000 block, and unless somebody's willing to push their whole 10,000 shares over to me, I don't want any of them. This is, Helpful in very thinly traded stocks. The all or none is very helpful in very thinly traded stocks. I'll maybe bring one up. Joint. I think I'm underwater here, as you can see. I'm up here at 626. Ooh. So I'm a little underwater. I'll probably have to double down on this. This isn't wide enough. I actually bought it at 6. It went up to 10, so I probably actually should have sold it then. But we've seen a little bit of rundown here. But my point was, look how thinly traded this is. We have one buyer at $4.30 and one seller, or one seller at $4.39, the other one at $4.57. So if you wanted to come in here and buy this at any quantity, it's probably not going to get filled. Look, only 5,400 shares traded today. What's that, like 20 grand or not even that? So not a lot of money flowing through this stock. So that's where these special conditions and things like that might come more in handy, although this is so thinly traded that even that wouldn't matter. But anyways, let's look at some technical analysis just very quickly. I will do it on something that is trading just with lightning speed, and that is oil. Okay, when you're trading, again, I'm not an expert on technical analysis. I know just enough to have some fun with it. Certainly there's other videos on YouTube and certainly books and people out there that are far more versed in this. And they also go over, there's lots of stuff on CNBC and Bloomberg and stuff that cover this. But certainly on YouTube, while you're on YouTube here, you can delve into technical analysis and find awesome videos where guys, spinning tops and hammerheads and all these different, they know the name of all these different reversal patterns and V's and double tops and head and shoulders, and there's just all these terms. I don't really, I don't want to say you don't really need to know all that or actually necessarily need to be impressed by all that. You don't necessarily need to know that's a shooting star formation and it could mean this. It could mean anything. The main thing I think you want to do with technical analysis, I want to tickle your beak a little bit. I don't know, there's probably a better saying than that, but I kind of want to just sprinkle your lawn with a little bit of water, but certainly you're going to need to maintain your yard and your technical analysis ability far and above what I'm going to give you here today. First thing first is a time frame. Here we're looking at UWTI. This is not something for the faint of heart or the people that are not looking to get into risk. If you love risk and you love high flyers, look how much this has moved today. 18% in one day, and that is not too uncommon. And 98 million shares traded today, which is about as liquid as it gets. So here's I'm looking at UWTI, which is 3x long crude, which is something called, I believe they call these levered ETFs, which means for every, percentage point that crude moves, this actually moves 3x that. I'm not 100. There's probably other people that can explain better why it moves 3x that, but the word levered will tell you that they actually likely borrow money, or there's, a lot of borrowed money in these kind of ETFs. Or, there's a lot of risk. Anytime you're borrowing money and stuff like that's happening, there's a lot of risk. But essentially all you need to know is this is 3 times long crude. So clearly, if we expand this out to like a monthly chart and we kind of zoom out here, because I don't know if I can. For some reason, I don't know. Sometimes I can get these things to work. Sometimes I can't. But maybe a daily chart is a little bit better. You can see crude. Here we go. This is probably better. Crude has been on and it goes back even farther than this, I believe. This is actually a better chart here. Here's all of 2000. This is 2012 to 13 up in this range. Look, crude traded flat for a year. And ever since about right around September 2014, something happened. I don't know what happened. Probably a large combination of things, mainly supply and demand. Crude has fallen off the table. Up here is Folks, this is $150, $250 a share up here. Again, this is about a year and a half ago. Today we're at $1.81. Yes, this is $250, north of $250, $300 up here. Just about a year and a half ago, about a year ago. Now look where we are, $1.81. So clearly a spectacular move down. And actually, the inverse of this, so this is up West Intermediate Crude or whatever it's called. Here is the inverse of it. So if you bet that crude would go down back in, let's say, August, June, July of last year, that'd be down in this range, $25 a share. Look where it's trading now, upwards of $340 a share. Look at this move. This is, it's not a hockey stick, but it's almost as good. Obviously, at $341 a share, there's less people that have appetite for this at this price, but wow, shows you how quickly these things can go up or down. I absolutely do not recommend buying. This is what I'm showing you here is a trading instrument. The reason why I'm showing you UWTI, DWTI is because those are trading instruments. This is not something you're buying and holding in your 401k. Obviously, if you bought DWTI and you held it for the last 8 to 12 months, you look like a genius. But a levered ETF can quickly go the other way. This is reverse split. That's what this is, a 1 to 10 reverse split too. So things like that can happen too. That can cut into your, cut into how many shares you have and things like that. So this reverse split 1 to 10 back at about $10 a share, and now it's at $1.80. So not something you want to hold, because if this thing keeps going down, they're going to reverse split it again back up to 10, and they're going to do that anyways. These companies don't like their, ETFs trading at such a low level, but because of market factors, that's where it is. So anyways, a little bit about technical analysis. You see two lines on here. This is an exponential moving average of, I believe this one's my 200-day, and this one, the purple one, is okay. Just double checking here. Again, I'm not an expert on this, but I know enough to have some fun with it. This is something called my geometric moving average, and it's a 20-day. You can see my standard is a 200-day, and usually you layer on top of that like a 20-day or like it honestly depends. And I'm using an exponential average and a geometric average. There's other ones. I think just a straight moving averages, and I could probably put an exponential. I use these. I can't exactly remember the exact reason why I use these, except this is what I was taught to use in school. So maybe my teacher was right. He was a trader, I think, at Goldman Sachs. So I trusted him, and I've been using these for years for whatever reason. And that's what I use. But as you're on YouTube and you see other guys, they'll likely have better explanations other than they're taking someone else's word for it. So you can play around with this, certainly. And certainly the more you get into this, the more you can play around with it. The other thing I use, actually, let's put this on like a 15-minute and see if the RSI and MACD show up. Okay, perfect. So I have two other graphs down here. And again, I can't go to Investorpedia or somebody else. They'll be able to explain MACD and RSI. I know this is relative strength, and a MACD is, can't exactly remember what this measures, but what I look for with the MACD is you have these two lines that are crossing. You notice how the red line and the blue line's crossed here. The blue line was trending under the red line, and then they crossed here. That coincided with UWTI trading from about $1.41 up until, it gapped, or it traded all the way up in here about 40 cents, which is a lot for a $1.40 stock. Notice the blue line then crosses the red line. So it was under, it crossed up over, stayed up above, and now here is where it crossed under. Notice that's when the price kind of trended down, but then we had this huge gap up. So something happened in the oil market where we actually gapped up. But so that's the MACD. Is this gospel? Is it's, I look for the lines kind of crossing. I also look for patterns. Here we got the MACD. It kind of bottoms out. Notice the MACD bottoms out here at certain points. Back here, it bottoms out. Back here, it kind of bottoms out. Tends to bottom out in a similar fashion. And you also see it topping out, at least back here. Back in these ranges, it topped out kind of almost at the exact same point. Since then, we've been trading kind of under here. You also see when it breaks out. You'll see here it topped out, same point. Here it tops out in a similar point. Here it tops out in a similar point. Here it topped out, but then it broke up. So you have this little gap up in price up here. So the MACD kind of broke up. So it's something you can look further into. When you see this happening, you can say, well, okay, what happens when MACD breaks up over? It actually looked as a chance to sell because you could have sold up into here, and now the price has moved back up in here. And as obviously you can see down in these ranges, when MACD kind of bottoms out, you can see the price bottomed out here and you had a chance to sell. Again, that's not that strong of a correlation. This one was probably a little stronger. MACD kind of bottomed out here, kind of hit its kind of resistance point, bottomed out here, and it kind of led to this leg here. Obviously, this isn't a predict. When we were on this day here trading oil and MACD was here, it could have easily gone further down. It just happened to leg up for whatever reason. Relative strength is something you can use in combination with all this stuff. It kind of shows the strength. I believe it kind of shows the strength of a move. So you can kind of see when things have been kind of maybe overbought or oversold. You can see a similar pattern. It kind of mirrors the MACD, and it kind of mirrors the price form. But what I use RSI for, again, is bottoming out. You can see this really strong, fairly strong pattern here of a bottoming out here, 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 and all through here is all in a very similar level. And so we're up here. So, traders can say, hey, we can easily come back to this range, or we can come back here. We can go, there's lots of things that can say, but certainly back up in this level when RSI is bottoming out here along with the MACD, when they're both hitting kind of a bottom resistance level, you can kind of see there are some patterns here where the stock has kind of bounced up. And obviously with UWTI, we're playing the bounces. Oil is obviously in a long-term trend down. So that's the number one reason why you don't want to buy something like UWTI and hold it. Because this is a long downtrend, unless you're Jesus Christ himself, predicting when this is bottomed is darn near impossible. You shouldn't even try to do that. What you're trying to do here is see little bounces and little trends, because this bounce here from $1.40 to $1.80 on 1,000 shares, 2,000 shares, 10,000 shares, is a lot of money. Even this bounce, you could have played another bounce, maybe even just this minor bounce where you're going from a 211 to about a 230, 240 bounce. You could trade that. Even intraday, some of these are intraday. You could buy down here at $1.50, and if you buy enough shares, you could easily sell out at $1.65 or so. Especially if you're buying 1,000 shares at a time or more, you could easily play these just tiny, 4, 5, 6, 7, 8 cent moves. And that's really what you're trying to do. You're not trying to hold this. Again, if you get anything out of this, especially on this levered ETF here, you're not holding this. You're not buying it and holding it. In fact, I don't trade this on Fridays. I don't trade it on Fridays and options expiration days. The latter you can look more into, but Fridays, simply because I don't want to be left holding this. I don't want to be left holding this over the weekend. And some, Arab multi-trillionaire decides to sell more oil because the money doesn't mean crap to him, which is often the case. So the basics of technical analysis. is simply finding the right stock, finding your trading vehicle. And what I like to look for are stocks that are highly liquid. Here we have a volume excess of 100 million. That is well in excess of the liquidity needed to trade a stock. So that's a check. Spreads are tight, so they're only a penny. That's a check too. Here we have a high of the day at 211, low of the day. We're actually on the low of the day at $1.78. That's 30 cents there. That's pretty wide, especially when you could buy, someone with a small account could comfortably buy, 500 to 1,000 shares of this fairly easily. Lastly, if you're into trading, you want to look for, opportunities. Fearful buying and selling. Greedy and fearful buying and selling. There's a lot of fear and a lot of greed in the oil market. So that's why it's been kind of my, cup of tea to trade. A few years ago was housing. It could be technology stocks. It could be whatever. I tend to go with whatever you feel comfortable with. I know some traders that trade the same. They couldn't tell you who the CEO of Cisco was, but they have become an expert on how the chart and the price action moves of Cisco. So they trade it. And I think you could do, I can't tell you a whole bunch about how upstream and downstream oil integrated partners and all that stuff works. I can't tell you how that works, but I can read these charts and kind of see trends. How obviously there's a downward trend here, but those are things you want to keep an eye on. Lastly, for some of you, maybe trading's too much. You have a family, you have other stuff going on. I totally understand that. Maybe you're trying to pick a bottom in oil. Do you buy UWTI? No, but certainly Exxon, ConocoPhillips, Chevron, Halliburton, not Halliburton, Schlumberger is I think the one I was thinking of. So those are probably how I would play oil on a long-term basis. I think there's some dividend risk with companies like Exxon and ConocoPhillips. Certainly there's some dividend cut risk, so you want to factor that on to when you buy, but you want to see this trend reversing here, okay, before you go long ExxonMobil or something like that, some oil company, especially if you're fresh on the block. I could see if you had shares of Exxon already and you're averaging down, that might be a little bit different. But if you're fresh on the block and you're trying to pick a bottom of oil, first of all, don't think you can, but notice for a while there, look how far we were trading under this. Look how far and for how long we trade under this 200-day moving, this orange line here. Look where the orange, this is where average should be, and look where the price is. You can also see how this geometrical moving average sometimes crosses our exponential moving 200-day average. You can also line that up, line those crosses and kind of those peaks up with our MACD. Notice our MACD peaked. Notice our RSI peaked. Okay, notice it's peaking over here. Okay, those are just some food for thought. Okay, if our geometrical smaller 20-day moving average is crossing our 200-day, and our MACD and our RSI are kind of leveling out or kind of coming up, that certainly signals something completely different. And so those are things you want to look at. So again, nothing's a golden rule. These lines and these graphs, the minute terrorism strikes or a tanker crashes, a tanker explodes, some guy leader in the Middle East decides to go crazy, North Korea, South Korea go crazy, China does something, it can, they can move these needles. That's what moves these needles, is real stuff, real people, real things happening. But you could certainly interpret a lot of it with understanding how these lines and graphs move. So For right now, it might seem like it's a lot of lines and graphs and stuff like that, but I encourage you to kind of delve into it. I might not have covered it and made it seem like it's fun and entertaining, but you know, this is what a lot of very wealthy and successful people are doing. I don't know. I tell people all the time, I don't know a single truly wealthy person that makes all their money buying and selling baseball cards, but I know a lot of very, very wealthy people, far wealthier than I probably ever will be. I can imagine to be. I've been to people's beach houses and vacation houses, and it's like they spend a month there and they have brand new furniture and they make their money trading stocks, buying and selling stocks, investing in really good companies. So it's something certainly you want to have your interest peaked in and at least have a basic understanding. If you have any questions, comments, additions, please feel free to leave them in the comments below. I'll try to address them, and maybe somebody else with some knowledge will address them too. I certainly don't know everything. Like I said, this was meant to be kind of a broad stroke overview, but if you got anything out of it, you should have learned how to, put in an order. Certainly with a limit is what we're going for. Teach you how to limit, and certainly on the sell side, we're looking for limit orders. I can totally understand in your 401k, maybe you're doing 5 shares at a time, $100 here and there, and you're buying stuff like Apple or Disney or really huge, massive stocks. I'm not going to beat you up for putting it through as a market order, but I'd like to see everybody graduate to where you're putting in limit orders unless it's some kind of automatic investment or something you can't really manage. Or if that's really all you want to do, you're probably not watching this video. If all you want to do is put, $50 in a mutual fund every month and retire in 30 years. So that's getting your orders right. I suggest if you're on a little bit of money, again, come in here and play with this free ETF stuff. You can literally, this one on the top, we'll go to this one. I actually have a few shares of this. I don't know if it's in this account, but silver. Here's silver at $13.89. What do I got it at? I've got it at, it's getting up there. I got it at $14.09. I probably should have come in here and bought it again. And actually buying it at this price probably was a bad idea. As you can see, I bought it at a top. I probably broke it at thinking it was going to break out. Probably thought it was going to get to one of these levels and then maybe level up, but that's, honestly, that's wishful thinking. Really, you want to be buying this down in this range. Really only 40, 50 cents off where I'm at. And obviously silver just, a year or two ago was, even just a couple months ago, was up in this range. So we could look at it on a longer time frame, and my buy doesn't look terrible. But, you could buy 1 share of this. You could buy 1 share of silver for, whatever the price is right now. I think market's market's open right now. So I could buy 1 share for $13.97. So, I got to click buy. So buy 1 share if you want, commission-free stuff. You could buy this and, all you need is $13.97 in your account. So I totally recommend, if you're new to it, start with that. Say, hey, I'm going to buy 1 share. And I even did that in the beginning. I even did that in my beginning trading days. This was several years ago. I would, I think I started with silver or oil back in those days. I'd buy 1 share and then I'd literally sell it when I made 2 cents. Okay. Might not seem like something worth doing, but for me at the time, learning the moves of the stock, I would buy it when when I thought the signal to buy was there. I'd buy 1 or 2 shares, 3 shares, only $30 or $40. And then when the signal to sell was there, I would sell. I would sell my 3 or 4 shares and make 20 cents or whatever. You know what I mean? And you can do that, and just doing that, I didn't make any money, and it was probably, I probably should have been trading 100 shares, 200 shares at a time, because I was pretty good at my technical analysis and timing. But what I didn't have was my order click pattern down. I can't tell you how many times I misclicked an order here or made a mistake here. So get it down with 1 or 2 shares, because trust me, I make mistakes now where it's oftentimes I'm just trying to buy maybe 100 shares, 200 shares, and I'll accidentally click it up, or I'll click, oftentimes maybe I wanted to buy 300 shares, but I didn't click up to 300. I only clicked buy, reinvest dividends. It stayed on 100, and I bought less shares than I wanted to. Same way on the selling. Sometimes there's a nice close all button here, and since I own shares of this, you can see I own a whopping 3 shares of $42. So I'm actually, doing, these are probably left over from some other trading I was doing, but you can see $42, all you need to buy or sell some shares here. So totally recommend doing that. Don't do it on anything with a commission. Do not buy 1 share, 2 shares, 5 shares, 10 shares of something with a commission. Make sure you're buying, again, unless it's a retirement account. I could totally see for a long-term investment, 20, 30-year investment, $5, $10 here and there is not going to kill you. But if you're trading something, $10 here and there, I've racked up $300-$400. You can rack up $300-$400 in trading fees in one day, because they're hitting you on both sides. They're hitting you for $10 on both sides, or $8.99, $7.99, whatever your broker charges you. So there you go. I got some room to go here. You can see I'm up here at $18. So what here in this spot, just really quickly, last tip. Here I'm stuck on this. Likely what I should have done is put some kind of stop when it broke through the average here. Probably should have gotten out at 16, and then I could have rebought down in here. That's what a pro would have done. But again, I'm not a pro. I'm just doing this. Again, this is just one of my accounts. This is really my trading account, and some other, I have some AT&T and some other longer term investments in here. But you want to, in this spot where I'm stuck here, again, it's only $40, so it's not going to ruin my day. Likely what I should do is find a signal to buy down in here, and that'll drop this bar. Since I have 3 shares, I might want to buy, maybe 25 or 30 or 50. Again, this is commission free, so I'm not worried about my quantity as much. But I want to push this bar down somewhere. I want to try to get my cost level low, so when it makes its next leg up, maybe into this range, into the $16 range, I can actually make money. Whereas now this thing's got to move. What is that? That's a lot of money that it's got. It's got to move $5 a share for me to make my money back. So that will certainly happen over a long period of time. But for $40, I really should try to turn this into some kind of trade, shorter term trade, where I can, make money when it gets back to 17. That's just some of the stuff you can think about as you're trading. That's why I like trading stocks, because here, for some reason I'm left with 3 shares. So I can turn this into a trade. I can turn this into something I can make money on. Whereas if you're stuck here on a baseball card, it's kind of tough to maybe it's a 1 of 1 or a card out of 10. You can't get any more. And so, this thing is trading pretty good, almost 100,000 shares today. It's not what I would call super liquid, but liquid enough to where I can definitely average down and get a leg up on this. So just some things, food for thought. Again, comments in the bottom. Let me know if you have any. Hope this helped some of you. Thanks for listening. We'll see you guys.